Hey, what's up? It's AM Trades, and today we're going to be doing a macro outlook of 2026, as well as going over what we kind of saw as general market trends, as well as geopolitical trends in 2025. So, we're going to be starting. First of all, we have a lot of very, very new information here concerning the Venezuelan situation, as well as kind of general just market outlooks. So, starting with 2025, we had the rise of AI continuing from 2024. This kind of started 2021 with ChatGPT as well as the NVIDIA crunch. And what we saw is a compute shortage for GPU specifically that is now extending into RAM, so rapid access memory, which is used widely in AI as well as general computers and electronics, is at a extreme shortage right now due to there being only a few producers in the world that are selling predominantly to larger corporations now who are paying a higher markup because they can afford to do so, but it leaves everyone else, especially the regular consumer, in a very difficult place. Now, what is the regular consumer doing right now? They are worried about inflation. So what has happened with inflation over the last year? We have seen since Trump got into office, he had been touting pre-election and post-election that he's going to reduce the cost of living as well as curb the extent of the inflation that occurred during Biden's administration. However, the real inflation rate paints a very different picture, as after this kind of black swan COVID event, we saw it stabilize at a good 2%, which is what Powell wanted to do, as well as kind of the Federal Reserve in general. And it has not decreased since Trump has taken office, mainly due to the fact that Powell and Trump are not very friendly with each other. They do not appreciate each other's policy, with Trump wanting to lower interest rates to zero immediately and Powell not being willing to do so. But this changes in 2026 as Powell's mandate ends in May. What does this mean? This means that he's going to be replaced by a nominee from Donald Trump who will take power in May. However, it is announced in January. Okay? Trump is expected to announce his nominee to fill the role in early January from a handful of finalists. All of these finalists are heavily aligned with Trump, of course, as has been seen with his reshuffling of the Supreme Court and his cabinet in general and the policy that they're pushing towards full MAGA aligned ideas. So with that being said, we can see that the mortgage rates as well are still quite high, sitting around 6%. And then finally comparing that with real inflation still at 1.4 and the just expected inflation for 10-year, expected inflation is 2.3. Now, what does this mean? This means that when Trump inevitably gets his crony in there and lowers interest rates to zero, inflation is going to soar. He's going to try to offset that with a huge lending. So he's going to be issuing treasury bonds at a alarming rate because he needs to fund his invasion of Venezuela as well as his continued tariff rampage, and that is not yielding the same amount of real income to the United States as he is saying. And this is important for Venezuela because if we look at the price of oil as well, for Trump to be able to economically support an invasion of Venezuela, he just said literally an hour ago that the Venezuelan oil companies are mismanaged, inefficient, and are not at the output that they could be, and this will all magically be fixed when Trump gets into the country and redevelops everything with American corporations to increase the output of oil and increase the overall revenues from it, of course. Why is this a bit of a slippery reasoning? It's because look at the price of oil in the last year and also the price of gas. As we know, Venezuela has very heavy crude reserves, and that's what they're outputting. They're the same type of oil that is produced in Canada, as well as that can be refined in Texas, Florida, as well as California. All of the Southern California refineries are all catered towards this type of heavy crude oil that will be pipelined in. Now, why does the price of oil declining not make sense? Because we saw throughout the whole year now that tensions are escalating in Venezuela, as well as Russia being under sanctions for the last couple of years, and the U.S. needing more oil, like the demand hasn't fallen. It's simply a supply problem. The supply is now being cut off by Venezuela. Price of oil has not risen. It hasn't risen over the last year with all of his talk around tariffs, as well as tariffing China, which is a major exporter, as well as Russia, Malaysia as well. All of these countries contribute heavily to the U.S.'s demand and need for their consumption of oil, right? This is with their military being deployed and heavily used as a kind of power tool, as they have always been. But this is not economically feasible, right? So one thing that doesn't make sense right now is the price of oil, just because with Venezuela being invaded and airstriked constantly now, last night as well, and the president of Venezuela being taken into custody as well as his wife, there is now a large kind of uncertainty as to where this is going to go, and that should cause the price of oil to go up, but it has not. So that's a curious one. As well as we see, following the Powell stepping down, we will likely see a June interest rate cut, right? So a Q2 Fed rate cut, because this will be the first month after Trump has instated his new nominee for the federal chair. What will this do to the dollar? The dollar will capitulate. He's lending money at a high rate. Inflation is going to go up, as well as price of oil being down and geopolitical tensions being high. What has the rest of the world been doing while Trump has been kind of full on attack with these tariffs? They've been strengthening ties between each other, because now they realize that there is less need for an aggressor to come, such as the US, and disrupt their trade and kind of just cause instability, which is what no one wants, right? And so countries like China, who already for the last 20 years have been heavily getting out of US reliance, as we can see by the metric here, that only 14% of Chinese imports are US based. They're only receiving, other way around. 14% of Chinese exports to the US are, that's it. That's the only part of Chinese exports that are made up to go to the US. It's 14%. So this is why China does not particularly need, and has been making that more vocal as time goes on, with their classic kind of more sit back and observe policy style, compared to the US, where it's more attack right now, especially under Donald Trump. So, other way around though, US to China is a almost 20% percentage of their total imports, and so it's a little larger. However, China relies less on the US than the US relies on China for many things. Now, another major economic news point that will come that has to do with the markets in general. As we know, the NASDAQ closed up about 22% this year, as well as ES closing up about 18% this year. I think it was 17 point something. We saw large outperformance in China. So all of the hedge funds out of New York that performed the best this year, we're just getting the metrics because of the new year. So we have Bridgewater, China Credit, whatever these may be. A lot of them are heavily invested in China. And so the Chinese stock market has seen a large kind of renaissance through this last year. While they still have issues with real estate, we know that the kind of most of the storm may be over, because the Chinese government has heavily subsidized and kind of stepped in to regulate all of these industries for stability. Now, what does this mean for the American stock market? We know that America will have their midterms in November, so this is almost a complete year out. However, what Trump is going to try and do, and what he needs to do to keep his political standing alive, is to prop up the markets, and this is what he's planning to do through the lending as well as the cutting of interest rates to zero. What does this mean for things like precious metals as well as AI and data centers? Now, AI will continue its reign because there is literally no regulation. The USA right now is a playground for whoever has the most money, most compute power, and most electricity. Electricity, what has the demand been like for the last 20 years? Steadily rising, and now we're at a point where it's going to be kind of exponentially rising. We will expect doubling in required baseload power for all grids in the United States and worldwide by 2040. How are we going to get there? We have less tolerance for carbon producing generation of electricity. We cannot use kind of renewables as we have them now, which are wind and solar, because if we need baseload electricity to power AI, you can't have things like solar, which requires batteries to be held to use it overnight, as well as seasonal problems. Wind power also has seasonal problems as well as weather-based. There's just too much uncertainty. So where does that lead us? The one place that leads us is uranium. So nuclear generation, we know that the price of uranium is currently sitting at around 81.65 per pound. And this is important because we saw a couple months ago, we saw about 40% decline in the price of spot uranium. However, what we saw from the underlying uranium stocks on top of that is the decrease was much lower and the upside was much higher. So for NextGen, this is a smaller producer, saw 50% down, and then we saw immediate resurgence, as well as Cameco going down about 40%. This is one of the largest in the world, alongside Kazakhstan's national mining company. And we saw a 42% loss from them. However, since from that point, we are currently up about, let's say, 80%. 170% from April of this year. Now, so we can see that this is already being priced in. However, I still believe this is a long way to go. We have small nuclear reactors becoming a kind of large talking point around the AI space because they need energy, right? So Meta, as well as Microsoft as well, bought rights to use 3 Mile Island and recondition it, as well as Chinese companies are looking more into nuclear reactors. And so this has pushed the price of spot uranium up, of course, but especially that of the underlying. So nuclear is going to be very important just due to electricity constraints. And then finally, if we go to precious metals, one thing that I think is very interesting, especially with the invasion of Venezuela now, is that silver is, as we know, the most conductive metal. Now, where do we see applications of silver? In high-tech manufacturing. What is the U.S. trying to bring back to the country? High-tech manufacturing. That is currently mainly in the space of defense manufacturing. So Anduril, Lockheed Martin, McDonnell Douglas, all producing weapons that the U.S. is using for foreign aid. So this is in Israel, as well as in Iran, as well as in Venezuela directly, right? And for every single piece of dispensable arsenal used by the U.S., so for example, a Tomahawk missile requires 15 kilograms of wiring that is done fully in pure silver, because when they have a kill switch and you need connection back to a fighter jet, right? Sorry, not a Tomahawk. This is to an aircraft carrier. But for, let's say, a cruise missile or a warhead deployed in strikes over Caracas, right? Last night. These warheads, they're expendable, but they require large amounts of heavy metals, right? And precious metals, such as silver. And so I think we will continue to see the bull run into 2026 for silver, especially with all the uncertainty, which pushes up the price of precious metals anyways, and the continued interest in bombing everyone. So this is kind of my general outlook. And then finally, we can look at the black swan events that we're going to see. So private credit has already been on a downturn for the last probably 2 years. We've seen cracks be shown through Tricolor losing $17 billion in default, as well as private equity becoming more saturated. And it's kind of been a slow uprising until it became exponential with private equity after the Reagan administration kind of deregulating everything. Because this used to be an illegal thing, right? Going in and borrowing money, saddling it onto a company, gutting it, and then reselling it. It gets to a point where that's not sustainable. It doesn't contribute anything, right? And so we're seeing kind of PE, the cracks are starting to show in that, as well as this is all being influenced by the AI bubble. So we're seeing NVIDIA, $5 trillion market cap. They're investing all into all of these smaller ones. We can see it's all quite incestuous, the way that they are kind of signing deals, making plans, where there's no real tangible path to profitability or contribution to anything other than that one circle of companies, right? So we have Palantir, NVIDIA, Anthropic, what else do we see? And all of their products. And this is, of course, Meta, Tesla, as well as Microsoft, all of these big players, right? That all saw huge years. Another thing I want to mention is the Magnificent Seven. Their share of the NASDAQ and of the US economy has risen and is at dot-com bubble levels, right? So these levels actually have not been seen since the Great Depression as well. So we're sitting between 35 and 40% on any given day of the entire NASDAQ's market cap. Market cap is just of these Magnificent Seven, right? And this is important because this contributes all back to the private credit collapse as well as PE on the way down. But yeah, as I said, it's going to be an interesting year. We'll see how Trump is able to manage all this. And I hope we see some of these come to fruition or not, and we'll react accordingly. So yeah, happy trading. I'll see you guys in the next one.